In this video I will show you a scalping strategy that has a huge potential to make you a good living with trading crypto. In backtests, this strategy has a 52% win rate with an average profit of over 5%. That's enough to earn you a good living. Want to know more? Then watch until the end to get all the info. This time I found an unexpected rough diamond that you might have never heard about, but already exists for a while. It is the balance of power indicator. This BOP indicator is a price-based indicator used to evaluate the overall strength of buyers and sellers in the market. Positive values indicate bull market dominance and negative values indicate bear market dominance. Now this indicator is not particularly smooth, but if you combine this with an indicator that provides us with the essential smoothness and trend detection, then it can result in a killer combination. The indicator that I use for overall market trend detection is the Wilder Moving Average, and the shorter term confirmation indicator is the Commodity Channel Index. The settings for these indicators are as follows. The Balance of Power indicator uses the default setting. The Wilder MA uses the 14-day moving average, which is reasonably short but gives the BOP indicator plenty of time to generate scalping signals. And the CCI uses a length of 14 and a signal length of 20 as a secondary confirmation indication of market trend. This trading strategy trades longs and shorts, so you can take advantage of bullish and bearish market circumstances. Long trades are taken when the close price is above the Wilder Moving Average for overall market trend determination. Then the CCI should be above its signal line as a second indication of a favorable market circumstance, but the real signal comes from the Balance of Power indicator. When this moves above the signal line, then the long trade should be taken. Then place the stop loss between the lowest candle over the last 20 candles, and then place a profit target of 1.5 times the risk taken, and this gives each trade a 1 to 1.5 risk to reward. Shorts are taken the exact opposite way. Enter a short position when the close price is below the Wilder MA, the CCI should be below the CCI signal line, and then when the Balance of Power indicator gets below the zero line, that flashes a short position signal that you can enter. Again, place your stop loss above the highest high over the last 20 candles and then place your target 1.5 times the distance to that stop loss. Now, you don't have to believe me directly if I say that this is a good trading strategy, and I certainly encourage you to do a backtest to see if I'm right or not. Now, of course, you can do this backtest manually to see how this strategy performs, but realize that this is a tedious task and also prone to errors and biases. It's much better to make an algorithmic trading strategy out of it, like I show here, and test this strategy programmatically. This way you can test huge datasets, many crypto pairs, and have quick results of the performance of that trading strategy. The Python file you see here is created to handle multiple entry and exit signals to test out. For example, this whole section can be used to enable or disable different entry and exit signals. And in this section you can determine which indicators to use or to optimize its settings for better trading results. Now if you want to go and optimize these settings, then be aware of curve fatigue bias in these situations. These can produce overly optimistic results on backtests that are hard to realize in actual trading. You can download this file together with the full backtest results on my specific setup from my Patreon page, so that you can test and use this strategy by yourself on your own setup. This way you also support me by becoming a Patreon member. If you're just starting out in this field of algorithmic trading with the trading bot and lack the information, then I got you covered as well with my ebook about algorithmic cryptocurrency trading for beginners. And if you want to support me in another way and don't want to spend a single penny, then please join my affiliates community on the new bybit.eu platform by using the code GetBybit as a referral. Or if you are already a Bybit.eu member, then you can also add the code 136780 in the Join an Affiliates community page on your Bybit's account info page. It doesn't cost you anything extra, but it's very much appreciated by me. Now you're probably wondering what the backtest results are of this scalping trading strategy. Well, these results are pretty spectacular to say the least. With this simple strategy tested on a 5 years backtesting period on 50 crypto pairs, I got the following results. The total profit was almost 4000% with a 52% win rate and a profit factor of 1.44. The average profit was 4.9% and the median profit was 5.7%. The expectancy curve shows a healthy uptrend, and you can see on this graph that the amount of wins and losses are rising almost evenly with the winning trades on the upper hand. This shows in a great visual way the 52% win rate. Now, always remember that a trading strategy cannot be applicable to all crypto pairs. Some are just too volatile to be used with a trading strategy like this. So remember to always test on your own preferred pairs where you go out and trade a new strategy. And always also take into account the drawdown that the trading strategy has. This in particular has one that's well over 30%, but considering the average drawdown of crypto asset pairs in bear markets, which are sometimes over 90%, this is child's play. So there you have it, a great scalp trading strategy for starters and intermediate traders. The balance of power indicator is a powerful scalping strategy that makes use of trading indicators that were specially made for this purpose. And since it is a scalping strategy, you can imagine that on lower time frames I could even achieve a higher hypothetical profit. On the 1 hour time frame I even got 7,200% profits. However, since you will trade almost exponentially more trades on lower time frames, you will have to take into account a higher fees and also higher drawdowns because of the trades that hit stop losses more often. So this is a trade-off between gains and risks. Now, you're very welcome to add your own trading rules, of course, to further improve the profitability of successful trades. And if you found some, then I'd be happy to see these in the comments section. I hope you got some real inspiration from this strategy and I wish you all the best in trading. This is it for this video. Please click the like and subscribe for this channel if you want to know more about future trading strategies. Thank you for watching and I will see you in the next video. Goodbye!